everyone? Welcome back to the RationalInvestor.com's Daily Brief. Happy Monday morning. My apologies, 7 minutes past the hour. How amateur, eh? Fuck. Anyway, we'll try and give you a half-decent update here for your Monday morning. Maybe about a half an hour or so long. The good part about it, of course, Mondays, blah, Mondays, blah. So I don't think we're really missing a lot. If anything, I think there was a big trap that was laid there in the market overnight and first thing this morning. And unfortunately, a lot of FOMOers, I think, got suckered into panic buying and got dumped. But anyway, we'll see how that goes when we look at the charts and the data. It is Monday. Monday, I'd normally do like sort of a follow-up in the Q&A session, the Afterparty session that we do of the weekend questions, if there were any surplus. I think we got most of the questions dealt with. I'll check back in on that in the Afterparty show. So we might circle around and do that. Monday's also, too, not a bad day to check in with the breadth indicator and the algorithms. See what they're trying to tell us about this crazy-ass market state. And you can see here we are, the 27th. So this is basically a month end here for February. Suppose in our little half-hour summary, we should probably check in on things like what's going on news, what's going on econs, and what's sort of the general message of the market. So without further ado, let's get to work. I think the first thing that sort of jumped out at me this morning was you can see how the market is cleaning itself up. And I do like this idea that probably around the Ides of March, we probably are going to see some sort of pivot back to the upside. Is it a week or two ahead of that? Is it a week or two behind it? Tough to say. Could there be a big dump heading into the event? Yeah, at any given point in time, I suppose. But you can see how the, over the past month, if you've been following along the channel, you've heard Brian sort of barking about how this breadth indicator was not happy. It was not really conducive for big rallies, and as a result, I think generally the market's been pretty sanguine over the past little while. Crypto-wise, we actually had our breadth indicator get us out of longs recently here. It was interesting to see. The weekend started off relatively soft, but firmed up through the latter part of the weekend. And like I said, sort of midday yesterday, I think I did like a crazy marathon session broiler chicken show yesterday. We had a bit of a snowstorm here locally in Vancouver, so no big car rides for Liam. So as a result, I had some extra time on my hands and just sat and just blabbed away until I was exhausted. Did notice that Chris is putting chapter references in the videos, which I thought was super cool. So that might be a way for you to sort of skip forward to maybe a section of the rant that might be a little bit more appealing to you if we do. Because actually we did cover probably about a half a dozen different cryptocurrencies, as well as Bitcoin and stock market and all that. So I thought I thought it was constructive. The only problem is that Brian's having a very hard time staying focused. And I don't mind just talking forever, but our marketing department doesn't like 3-hour videos. It's not constructive to adding memberships. But anyway. So, right out of the gate, jaundiced eye, not really an overly optimistic background. If anything, kind of curious, what the hell's going on with this universe? Why is it sticking out like a sore thumb like that? I have no idea. But you can see, generally speaking, the market is not really very happy right now. So probably play it close to the vest. I don't think you need to take huge risks in here. If anything, we want to see the market actually bottom and then we'll start thinking about uppy again. The good part about it is that, and I've sort of talked to you guys about this for a while, I do think crypto is a leading indicator in the risk space, and a lot of bullishness out of the cryptoverse. I mean, I've told you guys before, 5s and 6s on this weekly commodity trend survey suggests that, hey, you know, we've got actually assets in good trade location, and the momentum indicators are pointing up. That doesn't happen very often in the market, folks. But you can see all these 6s. Holy free holies. Tons and tons of 6s. Which means theoretically this stuff is investable. And you're not chasing. You know, the one thing that I did notice when I looked at a lot of coins yesterday, and when we did our crypto show on Wednesdays with Paul and Ben, is almost every name that people ask me about, it's at the bottom end of the range. It's trying to find its bottom. And you know, it might be investment grade. You know, maybe the project's just getting off the ground. Those kind of things. But it's not like super over expensive trappy. And I think that's a really important message. That I don't know whether I'm really conveying that clearly to the public. But these 5s and 6s, that's pretty darn important information. As for sort of the broader market, what the heck's happening in the world to sort of start off our day? I noticed that this CNN, they really love to trigger audiences. I don't think it's actually really even very good news. I'd almost be inclined, I've asked Stuart to do this, maybe I'm going to harass him a bit more on this. I think we need to downgrade CNN and move it down the sheet. Probably put it right beside Fox over here. Believe it or not, actually, I think the best news source for us is, I like the BBC. I think they're relatively neutral. Of course, I'm sure that's going to trigger some people. And I like AP. You know, ironically enough, the Associated Press, I think this gives you a fairly sort of just news-worthy summary. So, you know, interestingly enough, and keep in mind, the public always gets this all wrong. So the public right now is thinking that, oh, it turns out there's not going to be a recession now, and it's actually going to be later on. Oh, Jesus. You know, it wouldn't surprise me when we get to the point where everybody thinks, of course, there is going to be no recession, and then they'll knock it over into recession. That's usually, and I've talked to you guys lots about this. I still think that 2023, and if anything, maybe Josh, I don't know, Josh, are you here? Yeah, you are. I think that we should try, if we can, to make some sort of blog post about that Benner cycle kind of bottom image. I don't know whether you included it in your analysis or not on the most recent blog post you did, but you know, there was kind of like this Wyckoff bottoming pattern that I still think is definitely the most relevant. It takes me forever to try and find it on the Twitter feed. Oh God, I don't know where it is. Darn, that's too bad. And I end up losing time doing this stuff, and it's just not constructive. Not in marketing department doesn't like this stuff. Anyway, somewhere back in here. This, nope. Oh, that reminds me, I owe Cotter one mug. Oh, the bastard. Anyway, congratulations, Mr. Cotter. You got my trivia question right yesterday. I don't even know where it is. I've seen half of the stuff here. I don't even remember posting. But, yeah, where the hell is that damn image? Maybe I should pin it, because I think it's basically going to be the theme of the year. All right, where the hell are you? You're in here somewhere. Come on. Come on. There we are. We found it. I wonder if maybe I should retweet it. And that way, just to put it back on the top of the feed. I'm going to put that there. Let's see if that worked. Did that take us? Did this put this back up here? Come on. Up you go, you jerk. Oh, well. Yeah, it did. All right, so now I can find it a lot easier. And you guys are posting it in the lounge already? Yeah, there you go. See, now that's 1 + 1 = 3. Thanks, Sharky. Anyway, so I still think that this is what our year is going to look like. It's going to be messy. But of course, when you say a message like this, then people go, well, you're kind of boring. And if we start going through like face rip uppy, then they go, oh, you don't know what you're talking about, blah, blah, blah. So I'm not really a big fan of chasing the market in here. I still think we have a huge, huge sort of soap opera, and it probably plays out through the whole darn summer. This whole FTX trial and stuff, and of course, Mr. SEC is still floating out there. So, just be cognizant of that. And then, of course, like bigger picture S&P 500. I still think we've got this this big sort of albatross hanging over our heads with regard to the U.S. debt ceiling debate and the right-wing political party in the States having enough with the socialist movement. Anyway, we'll see what happens with regard to that. Other than that, didn't really see any market-moving news. There's tons of news items here that can trigger you. One thing I did notice, of course, the Chinese are back at it, and I think the Chinese are trying to take a slightly different angle. I think they want to try and attack the Europeans, kind of like how Russia was hoping that the Europeans would be split on supporting Ukraine, and NATO would be divided and stuff. I think China would like to try and do that. So they're attacking. I read this article this morning. They're attacking. There's a Barcelona mobile phone, mobile network. I can't remember what that's what this thing is. MWC, and I think MWC stands for Mobile World Congress. What? But anyway, out of Barcelona, and Huawei, of course, this is the Chinese sort of government puppet in the telecom space there, the wireless space in China, in a lot of hot water with the Western nations. We won't open up that can of worms. But it is just interesting to see, if you read through these articles, how China they took a step backwards, to let the dust settle, and now you can see them attacking again. So it's fascinating. Other than that, this West Coast storm, turns out it was all sort of fluff. So really didn't see a lot of news that was sort of like, wow, that really, oh my goodness, that's going to change the market. I didn't see anything like that at all. Over on the econ front, Mondays usually they try not to drop any like major bombs. Usually they like to drop the bombs later on in the week. And of course, we've talked lots about the options expiry and sort of the finessing of stuff around that. I suppose the biggest econ that we see here, and of course, Mr. Powell has said this repeatedly. They kind of got the price inflation component, which is actually the easier part of the two. The cost push part of the equation, they got that under control. Natural gas prices have come back down to earth. I heard they're starting to perk up a little bit here recently, but they're not going up like the double digits kind of price appreciation we saw this time last year. And it appears that the grain markets are relatively calm, although I do like the idea of being long the grains here through this seasonal window. And interestingly enough, right, kind of like Bitcoin, which is in a kind of sad sort of, I'm sure Bitcoin maximalists never wanted to hear this, but I do believe, and especially with the options expiry stuff that I've been showing you guys recently, this image, I do believe Bitcoin to a certain degree has been securitized by Wall Street, and now, of course, they get the public to come off FOMO buy. They could easily rip some hearts out. I mean, Sharktoshi over there, I'll tell you what the statistical odds are that these gaps all down below have to be filled in. So, anybody who knows their TA can look at this image and say, well, of course this thing has to come back down here. It's just common sense. And ironically enough, if we actually just draw a really simple trend line, boom, boom, that's not a good sign, right? We're supposed to, theoretically, bull markets, you're supposed to see higher highs and higher lows. And that's actually technically a lower low there with a whole bunch of gaps the whole way along. So, I don't know, does this silly thing have to trade back down here? Could be. And I've made the argument repeatedly that I suppose, let's see if I can quickly find it. Of course, this never works the way I want it to. But hey, let's be positive, right? Where are you? Come on. Crypto, Bitcoin, cost of production. Hey, I got it. So keep that trend line in mind. And then when we go and look at things like the cost of production, actually interesting to see hash rate looks like it's ticked back up here. So that's a good sign, I suppose. But you can see where the S19 XP, this is sort of the super duper fancy schmancy most recent hardware, and actually there's probably even newer ones than this, but this was, I think, about 4 or 5 months ago. You can see where the prices are, right? That's like $9,000, $10,000. And then I've also shown you there are guys in the crypto space where their cost of production is well below 10,000. So just even on this image, I mean, could we very easily connect the dots, kind of like what I showed you on that Bitcoin ETF? It's just simple, you know. In fact, actually, we have he isn't an instructor on the site, but he could very easily be our secret options formula sort of quarterback club meeting chief technical analyst, I suppose, David O. He loves to draw these inverted head and shoulders, and then if the inverted head and shoulders fails, it actually turns into a megaphone. And I might even make the argument that that might even be a megaphone in the making right now. Anyway, I'd have to zoom in and see it. Anyway, so the point here is we'll probably have to come down and test this low in earnest. And that's probably when that ETF fills in all of those gaps. But there's no guarantee that low holds. And of course, 78.6 of the entire range. The interesting thing about this is Simon Dixon, he used to always say, when Bitcoin corrects 80%, that's when you should probably buy. So, I mean, technically, we haven't even had that event yet. Of course, all of you guys, you don't want to hear that. There's not really a hell of a lot to get excited about here. This is a sideways market that, unfortunately, I kind of feel like there was some traps laid here overnight. We did the broiler chicken show yesterday, and we talked actually, when I woke up this morning, I was quite surprised to see the price up here. As soon as the retail market opened up, bang, they just knocked it right back down. Ouch. So, a little bit suspect what happened here. We talked about this yesterday. You know, this was a V bottom. V bottom should be tested at the very least. And candle body lows for trade location. Now, watch this. This will be cool. Is these candle body lows for trade location, are they going to be in a reload zone? I bet they are. Oh, there's the reload zone going one direction, but we need to flip it around, go the other direction. And survey says, look at that, 78.6. Oh my goodness. So it's kind of like this stuff. After a while, it just becomes so cliche. So, you know, if I did want to buy Bitcoins, which frankly, you know, this is a really, really good lesson. I saw somebody drawing trend lines over the weekend, and I couldn't believe it. I was like, has anybody ever actually taught you how to actually draw trend lines? And then what you're supposed to do? This is not a trade location. You're going to get your head handed to you if you chase this. And sure enough, now we're working our way back down. Just even in this past 4-hour candle, we were right back down below that level. You got to actually see some market structure over here. Give me some sort of W something over here. Because this might easily, and of course this is what drives all the noobs crazy, including myself, for many years, we might just walk our way right down this trend line on the other side. So anyway, kind of a screwy market here. All right, so I'm not quite sure how I got off on that tangent. I was supposed to be talking about the news. So what the heck's going on here, Beamish? So pending home sales rise, and like I said, this is not what the Fed wants to see. The Fed does not want to see this. They got the cost push part of it under control. Then there's the demand pull. And of course, and this is how I got off of Bitcoin, my apologies. They've gone and securitized all these damn houses. When, in the Great Depression, they spent a lot of effort to get the goddamn banks and brokerage business out of the housing industry because people need homes. No, now you've got stories that, like, literally all of the houses are being bought by what's the hedge fund manager guy? What the hell is his name? Peter Fink or something like that? No, I don't know. BlackRock. Yeah, those guys. I mean, they're buying up all the houses. Why? Because they're securitized now. Wait a minute. I thought people are supposed to have homes to live in. I mean, oh, God, it's so frustrating. So quite literally, Mr. Powell has to break Mr. BlackRock's back. And that's going to be tough. It's interesting how Mr. BlackRock, of course, is buying up all these damn houses and basically going to he's going to be the 21st century slumlord. And if anything, it makes perfect sense. Do you know who actually owned the biggest slumlords in like Dickinson's days and stuff like that? Scrooge and all that was the Church of England. Of all people, the church actually owned most of these slums and forced people to live in absolutely horrific conditions. I don't know. Have you seen who's going to be taking charge of the British monarchy? Jesus. Anyway, so this is the big debate right now. And actually, I think it's going to quite literally be Mr. Powell against Mr. Hedge Fund Manager, BlackRock, Larry Fink, and all those kind of people. And I'm sure he's not alone. I'm sure there's others as well. But that's the big problem here. And it's not even so much the consumers. Interestingly enough, because of the way that the inflation picture has set itself up with this housing market, they've, of course, injected inflation into the consumers' lives. So the consumers are like, well, we don't have any choice. We got to have higher wages because you're killing us here with these damn rents going up every single month, kind of, on an annual basis. So we're not out of this problem by a long shot, and I wouldn't even be surprised if the Fed has to continue raising interest rates. If anything, the Fed wanted to see these home sales and the housing market calm down. So interesting how it's such a slow news day that they're actually, you can see U.S. durable goods orders fall more than expected. So, they're getting a little bit of traction. Again, the Fed's doing a great job killing the classic economy. It's just we're in this really screwy economy now where the housing market is actually a huge component of the economy, like a really big part of the economy, and they can't get control of these hedge funds. So anyway, go figure. You can see the index is relatively up on the day, relatively positive. As I had said earlier, it kind of feels as though a little bit of a trap was being laid here. U.S. dollar index down on the day. U.S. dollar index, of course, probably a good, on Mondays, probably a good idea for you to check in on the U.S. dollar index. Just give you sort of a backdrop of what to expect going forward. Probably better for us to zoom down on like a daily chart. So, primary trend line. In fact, actually, that's incorrect. Let's make sure that's correct. There we go. What's this high? 1383.5, 1385. Okay, that's good. So, boom, boom, boom. It looks to me like we could still move a bit higher here on the U.S. dollar index. When exactly is the next Fed meeting? I think we'll probably have one probably in early March. March
20 to the 21st.
20 to 21st. All right, thank you, sir. So interesting how that is going to be just on the other side of the Ides of March. So Ides of March are 15th, I think it is. And Chris is telling me the 20th, 21st is FOMC. So my hunch is there's probably some sort of pivot through here. And I wouldn't even be surprised. Look at that huge hole on the profile up there. Don't be shocked to see some upside movement here on the U.S. dollar index.
Correction, 21st to the 22nd.
21st to the 22nd. Oh, how could you, Chris? Oh, my goodness. All right. Anyway. All right. So there we go. And you know, I sort of talk on the site about the Ides. Ides of March usually kind of a tough market state. I've seen markets crash in past around this event. Usually, actually, this is around the Japanese fiscal year end. And of course, they're probably going to have an interesting year considering what's going on with China. Actually, that's another interesting sort of caveat. I noticed that the Evergrande football is being thrown back into the ring, so we might find some more fireworks around the Chinese real estate market here. So I don't know if this is a secular. I don't know. Is that the right word? I don't know. Top in the U.S. dollar index. I suppose once our rally, our dead cat bounce rally that we're enjoying right now is out of the way, probably have to expect some sort of continuation pattern. We are down into, of course, Collins' pump chaser zone in this case. So seeing a turn through here, 38.2 to 50%, does make sense. And of course, we got a 2.618, so that makes sense that we pivoted off of that. So probably until this thing actually starts showing signs of actually trending to the downside. We've got 8s and 9s on the Tom DeMark, so this move is getting a bit old. But until we actually see this roll over and start to head down in earnest, probably things like stock markets and stuff like that, Bitcoin and stuff, probably need to take a bit of a pause. Stock market, as we had said, came off a chunk last week. Dumped right into, I guess you could even just say the weekend there. Well, what I was kind of thinking, maybe inverted head and shoulders kind of idea. So we'll be watching this low very closely. If this low can't hold, so that means we go through, then really we probably ought to be thinking about things like megaphones to the downside. Is that complete? I don't know. Actually, tomorrow we'll get together with David, and as I said before, he is our resident megaphone head and shoulders expert, so it'll be interesting to see what he has to say. Kind of consolidation-y, if that's such a term. Probably do fibs going back the other direction against the lows, and you probably find candle body lows or trade location. You can see there's a sexy little tail right in there. Interesting little inverted empire right off of that level there. So nice little stab down into this reload zone would make sense. And if anything, this was a really, really good example of just counter trend rally. Hit 2.618, 78.6. You know how much Beamish loves that. Horizontal support and resistance, candle body highs for trade location, and look at what we did. Ran right up into that level and then straight back down. And in very typical Monday fashion. Did they give us an M here? Did they give us a nice polite setup to get short? No. It was straight up and straight down. Jerks. So, it is what it is. And actually, Chris, if I'm not mistaken, didn't you say you had a trade in the stock market here this morning?
Yep, had a nice little paper trade short off the naked pocket market week, Thursday's everyday session.
You got a screenshot I can show the good people? And actually, this is a really cool concept. It's part of our level 2 program talking about volume profile. You heard Chris talk about naked pox. So this isn't a bad little sort of piece that you can add to your tool belt. Maybe I'll just tease you in this public video. If Chris, you got that screenshot for me I can show these good people?
Yeah, 1 second, getting up here right now.
Right, and then maybe we can just go into detail in the Afterparty show and sort of walk you through the trade, because actually it makes a lot of sense what he did. Well, the question is, where's the chart? There it is. All right, awesome. Let's see what he's got for us here. So here is Chris's chart that he shared. 2.618, looks like he identified that level nicely. This was a POC from this session, and we went up and tagged the POC. POC stands for point of control, and you can see it's basically where the most volume traded. So this is probably exactly where institutional players put on shorts, expecting this dump. and took profits on this rally. So that's obviously a huge level of interest for Wall Street. And look at that. Doink, rejection. Beautiful. And of course, we got this really cool tool that we like to use because I like the idea. This is a 9-minute chart. I like the idea of confluence and the idea of you would like trade location. This would be a really good example of a trade location as well, 2.618s, as well as candle body highs, as well as horizontal support and resistance, as well as 78.6s, right? Those are all trade location ideas. I also really like if you can sprinkle in, let's see if I can show you that, there it is. So I like to sprinkle in indicator confirmation, and we have 5 confirmed bearish divergences. I'd call that indicator confirmation with 2 potential right on this event here. And what does price do? Straight down. So nice trade there, sir. Sounds like you're getting better and better at your craft. Yeah, well executed. Like I said, if we want to go into the after party, talk a little bit more about that trade setup, we can. So I guess just what I'm thinking of, and this is so typical Monday. Monday is usually a trap day in the market. So if you want to, take something from this video, add to your trade journals is don't trust Monday mornings. Usually they punch you right in the nose, and there you go, folks. That's the definition of getting punched in the nose. So nice trade there, sir. And that's the one thing that I miss about working with Chris is every morning I would get into the habit. Oops, now what did I do with that image? Here we are. I get into the habit of drawing the previous session's value ranges, and those levels work really awesome for trade location. So nice job, Chris. Nice job. Looks like you're getting better at this, so that's good. All right, what time is it? Yeah, that's about 30 minutes. There's, of course, chitter chatter amongst the TRI team, how we can make this thing a little bit better of an experience for all of you. So, what do we got here? Got the Dow up 100 points. I think we were off like 400 or 500 or something midweek last week. We've got Bitcoin. Actually, I think Bitcoin's actually down now, isn't it? Let's see what we got here. Bitcoin down $175, but really just carving out just really, really good example. We talked a little bit about candle body lows. I remember we reviewed this in the broiler chicken show yesterday. It was a 3-hour show, so there's plenty of stuff we talked about. I really like this as a trade location. Sort of, what is that? 22,968 down into this tail. So I'll be watching how she acts down in here. And if anything, what we had now, I woke up and I saw this huge move up, and I was like, wow, that's quite remarkable. So just for illustration purposes, this is the image that I posted in the lounge, kind of like, what am I thinking right now? And this is just really reload zone ping pong. So one might argue that's a buying window, and I do things like green boxes. And that's a selling window, red boxes, and these are my reload zones that I like to talk about. And in the middle here, and it's a Monday, this is just chop Vegas. What they're doing right now is they're taking all of the kids that FOMO bought this trendline breakout, which really wasn't a breakout, but we won't go into that now. They got them all long. Then they said, okay, maybe let's paint a little bit of a fractal top. Some people are going short. Then, no, it's long. Let's get long. Run the stops. No, let's go short. And really the end result is basically a hurry up and do nothing market. And very typical Mondays. Very typical. I do like the idea of a stab now back up into this topping zone going forward. And what I posted in the lounge, we didn't have this reaction low. I don't know whether this is the ultimate pivot. It's interesting, 61.8. But how do we work our way up into this zone up top here? I get the funny feeling it's going to look something like A, B, C, D. So trend continuation, I suppose if you are a trader and you're looking for levels, then probably you want to be, if you are hunting longs and you're like, well, Brian, I like the idea off of this mountain man, we keep working our way higher. Well, then that's just simply, is this a bot setup, trend continuation? So we go bot setup, doink. 33 to 66, and can we start to see market structure develop through this window here? So, I mean, it's incredible how the market sets this stuff up. You literally can't write this any better. I mean, like if I wrote this that, hey, this is what's going to happen, you'd go, no, that's not what's going to happen. This is going to happen. But look how the market is setting this level up. You can see, look at that rally peak, right? I mean, I just eyeballed this. I suppose we could get a little bit crisper on these levels. Something like that. Just leave it at that for now. And look at where the dead cat bounced to. Bang, right to the 25 level. So, if you are a bull and you're thinking about hunting long setups, then, maybe let's see if we can get some sort of, I always like, one low, two lows, three lows, and if I can, I want to try and front run that bot setup level. That might even develop off of something like there to there. So, in this particular case, I might almost want it up a little bit higher so I can get that W. Give me some nice bullish structure on the other side of this fast trend line. Then, we probably have something to work with there. So, there's your market state. This could very easily, and this is why it's so critical for a guy like me to have 3 higher lows or 3 higher highs. Because this could very easily also go the other direction. So I wouldn't be in a big hurry to call this one way or the other. So we could very easily do something like that, which interestingly enough, that would just take us down. It would just tag the trend line from the other side, which, as I said before, we never really did get great market structure on the other side of that trend line there. And, this could be a little bearish bot, right? I see 1 high, 2 highs. This thing, and I don't want to get confusing here, so we'll just finish this off just with this little comment. But could very easily see 1 high, 2 highs, 3 highs, and then and you could draw a bearish bot to take us down below. So what I would actually say is for the relatively new people to trading, we're in actually a really dangerous zone here. The new people, you could get chopped up really easily through this mess. So go slowly. The lower time frame people that know how to work with trade setups and understand their own particular 3 reasons for a trade, and they're very comfortable with risk management, and they have very clearly defined entries and exits, and they know what they're doing. Okay, go and have fun on the lower time frame. See if you can trade setups to take us back up top or bearish setups to take us down against these lows. But right now, this to me looks like it's got Chop Vegas written all over it. Top end of the range, bottom end of the range, and we're just sitting right in no man's land. We could very easily oscillate all around this area. So be careful, you public. This is dangerous. Okay, I think I'm going to leave the rant at that. That's about a half an hour, so that wasn't too bad. It's a Monday. Usually Mondays, you kind of want to, especially if you're like, swing trading, day trading, that kind of stuff, you kind of want to leave them alone. And taking on new positions, that's not usually a good idea. And I don't even really like a lot of crypto here. I mean, there's some crypto names that I really want to buy. But, this audio here, I'm hearing lots of good things about this. But I can't come in and buy that there. This WAN, same sort of thing, hearing good things. I can buy down here, sure. Can't touch it up there. So, unfortunately, that's your backdrop right now. So, all right. Okay, I think I'm going to leave the rant at that. Hope you got some value out of it. Happy Monday morning. pop on the after party show and we'll just chit chat a little bit about all the various different things we talked about in a little bit more detail. PMA for the win. Thank you very much, Chris, for awesome job as always. Great trade there on the ES this morning. Beautiful, very professional day traders trade. And maybe we'll even talk a little bit about what Chris was seeing in the after party show for him to pull the trigger on that. All right, have yourselves a great day. PMA for the win. All the best, and bye.